And Jason, I know you've been analyzing and investing and otherwise involved in the gaming industry for, I think, 20 plus years. So thank you so much for joining us here today. We've been following your work at calvinair.com since our inception 10 years ago. This is an honor for me as well. Thank you, iGaming Next, for bringing us together today and for having Jason here with us. And just so the audience knows, the way that we are going to manage the session today is that for the next 20 minutes or so, I'm going to be asking Jason a series of questions, some really juicy ones. And then for the remaining 10 minutes, we will be taking questions from the audience, so please do send them through as the time goes on, and we will try to get to as many of them as possible. But anyway, Jason, so let's get started here. Like I said, I've got lots for you. The first question that I do have for you here today is in regards to SPACs. We've been seeing so many of them in the news and the gaming industry space today. I know that you've been quoted saying that the SPAC structure is a super, super attractive way for iGaming companies to go public. So I wanted to hear from you why you feel this way, why you believe there's going to be a lot more deals coming in this space, and perhaps touch on some of the criticisms on this model as well.
Great. Well, Becky, good to see you. Thanks for having me. Very excited to be participating in iGaming Next. It's a great event, and I'm sure you'll have a lot of amazing questions. And we can start with SPACs, which is certainly one of the most interesting areas and exciting areas in the gaming industry right now. DraftKings is probably one of the great success stories of the decade. And of course, it came public with a SPAC. And its success has led others to follow that lead. And now you have Rush Street Gaming and Golden Nugget Online and quite a few others, that are moving towards going public with the SPAC model. So why do it? I think is really the question. Why bring your company public in a SPAC? And it's really sort of the great question. And when I researched that, the answer really surprised me. And number one, it's faster to take your company public in the SPAC model than it is to do an IPO. So that's a good thing. But more importantly, when you go public through a SPAC versus an IPO, in the US at least, you have the ability to tell your story, talk about your company in a way that's much less restrictive. So when you do an IPO, you file a statement called an S1, letter S1, and it's very restrictive. You just have to say what the Securities and Exchange Commission wants you to say. When you go public through a SPAC, you're effectively merging. You're merging a blind pool of cash in your business. And that process requires you to file a document called an S4 with the Securities and Exchange Commission. And of course, your deal will be voted on by the shareholder. What I think everybody's concluding is it's not only faster, but the S4 is a more complete document. It gives you the ability as an owner of a business like DraftKings or Golden Nugget Online to give projections, to give forward-looking statements, to share your vision about where you think you can take the business in the US and in Europe over the 2021, 2022, 2023 period. So the reason there's so many SPACs, and this is not just exclusive to the gaming industry, this is in all industries, is because it's proving now to be and the pandemic it's accelerated it because you've been able to raise money quite easily during the SPAC craze, if you will. But it's faster and it's a better way to go public. And for the SPAC sponsors, it used to raise money, take you 3 weeks. You have to travel all over New York, Boston, West Coast, Texas, maybe London. It's now 3 days on Zoom, just like this, and you have $500 million in the bank. What's better than that?
Yeah, pretty amazing. It is exciting, but there are criticisms of the SPAC model. Some people think that it's overblown and it's going to die out and all this. What do you think about that?
Well, I think the real criticism for me is the sponsorship economics. So a sponsor of a SPAC is entitled to 20% if they can keep it. So if you raise 200 million, and you successfully create a transaction, your value in the new company is 20% of what you raise. So $40 million for a sponsor is a great payday. Would put you right in the top decile of what remuneration or what compensation would be for an executive in the gaming industry. And since it's become so competitive and there's so many SPACs out there, that 20% is yours if you can negotiate that you're worth it. And so I think the criticism to the SPAC model that I've heard is the sponsors aren't doing much. They're finding deals, but are they worth it? And I think the SPAC sponsors who can make a strong case that they can add value and they are worth it, they can bring investors, they can bring strategic guidance, they can bring board members, they can involve themselves in the governance of the business. Well, then most have been successful in keeping it. Others have said, we may not bring as much value, but we want to contribute to the success of the business. So as the stock price goes up, as the SPAC's value increases, we we'll earn into it, like a vesting ship plan. So there's a lot of creative ways to resolve some of the controversy, but right now it's one of the best ways that we've seen to go public, and I think it may ebb and flow, but I don't see it going away.
Excellent. Very good. Thank you. And we've mentioned DraftKings already a couple of times here. And so I wanted to know from you, do you think that US sports betting companies, are they dramatically overvalued at present, or is the hype real? And if the hype is real, is there still opportunity for investors to pile into certain stocks like DraftKings?
So it's a bit of a gold rush, as you can imagine, here in the US. When I get calls from people that have, that are friends that I've known a long time, and they have no idea, what sports betting is or how it works, and they have a deal in the space that they want to show me. That's usually not a great. That happened at the very peak of Bitcoin. Everybody I knew wanted to get into Bitcoin. It's happening a bit now in sports betting. Everybody has a deal, an idea, some way to get into it. So that's not a good thing. That doesn't why the valuations are probably ahead of the business. The U.S. sports betting business today is actually quite small. Its potential is enormous, and I think the way to think about the U.S. market is not just limited to the size of sports, but because of the financial pressure that most states find themselves in, it's very likely over the course of this decade that sports will be legalized. Online casino will be legalized. Poker will be legalized. Live table games will be here. It'll be pool betting, between states. I think, one prediction I'd make here, is that the states, we've been advising one or two of the states as to how to do it. We're pushing one or two of the states to legalize sports betting and link their liquidity to Europe and the UK to really, make a difference. And that would be really exciting. So the opportunity is amazing. The stock price valuations are probably a little bit ahead of where they should be because of the pandemic, and because these are recognized as stay-at-home beneficiary businesses. They've actually done quite well this year when most businesses have failed. The land-based traditional gaming business, has been at the other end of the spectrum. It's been very hard to get people to go to casinos. Most are losing money every day, and those businesses have much lower valuations as a result.
Exciting times, the online space. How sustainable do you think the leads are that DraftKings and FanDuel, for example, have achieved so far, or is there room for other companies to come in and carve out a bit of the market share?
Well, they're certainly incredibly well recognized. When they were just fantasy sports businesses, they spent a lot of money on brand recognition and sponsorships and sporting relationships, both in stadium and on TV. I mean, there was an NFL season a few years ago. You turn on a game, it was always DraftKings draft. So there's a lot of value in that, and I think it's hard. Brand recognition is hard to get. But I often remind people that Bet365 was not first to market. So I think it's an important case study. They're market leaders now. The way to win, obviously in this business is the economics of customer acquisition, customer retention, extending out lifetime value. it's very, very early days in the US with respect to all the gaming ecosystems. So they have a market, both DraftKings and FanDuel have market lead, and it's exciting to see what Penn Gaming has done with Barstool Sports, and Barstool is just a really amazing video content around sports, and their ability to acquire customers nationally is exciting. It's exciting to think about. But they're all first movers. Bet365 was late to market, and look how amazing they've been. So I'd say it's as a marathon runner, I see a lot of people come. I see a lot of people run out, and in the first 5 miles, they're doing great, but they're very easy to pass at mile 18. And what matters is towards the end of the race. So I would remind everybody of that metaphor.
Yeah, it's super interesting. And actually, I wanted to ask you what you do think about companies like, for example, Penn National Gaming. They spend their money on, or they have this merger with Barstool Media Company. What do you think about this kind of model versus the operators spending their time and money on developing new products and focusing on technology? What are the pros and cons, do you think?
I mean, it's all related. I mean, you need to have cutting edge technology, and obviously that's kind of all under constant development towards customer acquisition, customer retention. With respect to branding, we'll see. There's just we'll see. Ultimately how much the brand matters. Certainly in capturing original customers. I mean, it's the video content that Barstool is producing, and even Fox. I mean, I see during the elections, I was watching Fox, and I saw that they were promoting betting on politics. And when you watch Fox Sports on the weekend, I mean, they're promoting the Fox Bet site. So there is a lot of value to having broadcast. Direct your customers to the site and promoting on broadcast video various forms of betting. So I see the convergence that we've obviously seen. We saw it very well with Sky Bet in the UK. So I think you'll see more media type partnerships, but it's going to be hard to imagine to compete if you don't have that. That's for sure.
Very interesting. And I know a little while earlier in this conversation, you were saying that we saw DraftKings commercials every 5 seconds a couple of years ago during the Super Bowl. Wondering if we see continued marketing in this manner in the U.S. market, is there going to be an inevitable clampdown, with regulation like we saw in the UK, or seeing in the UK, I should say, if this continues in the U.S. market? What are your thoughts on that?
Well, I would say definitely, number one. What's amazing is the shareholders of the U.S. gaming companies now, whether it be DraftKings or Rush Street or Golden Nugget Online or Penn, when I tell them that there's been dramatic increases in regulation in the UK, and just remember, a year and a half to 2 years ago, I mean, there were some pretty draconian proposals on online gaming that were floated and continue to be floated. They look at me like I'm crazy. So what do you mean? So this is a highly regulated business. This isn't just this isn't just born today in the US. This is a very mature business in the UK and in Europe. And it's highly regulated, and there are needs for protection. There's a lot of technology to resolve underage gaming and problem gaming, and those technologies get better through machine-based learning and AI every single day. TradeTech is a leader in this area, but the U.S. investors are very unsophisticated with respect to that, and because they're new, and most of them just own the shares in DraftKings because it's been going up and continues to go up, which isn't great. But eventually, there will be controls, because it's an industry that deserves to be highly regulated, and I think the U.S. is clearly behind the UK and Europe, but as it matures, I would expect to see higher taxes, more controls, more protections in place.
Okay, very good. And we've been talking quite a bit about online sports betting, but wondering how important you think the online casino component is to the ecosystem here, or can online sports betting companies succeed, with just that particular offering?
Online casino is very important. To me, it's the golden opportunity. Sports betting sort of gets you into the market and has opened up the U.S. and the leagues got behind it, politicians got behind it, but the real profitability will come with online casino. It's coming, and we'll see which state sort of pushes first, but there's no question about it. We'll have all verticals in the U.S. towards the end of the decade. And again, I think most exciting is the live table option.
Excellent, excellent. And Jason, I know that you were involved with Sands in the past, and wondering, we were hearing that Sands potentially might leave the U.S. and focus solely on Asia. I'm wondering what you think, if this does actually happen, what impact this will have on the rollout of online gambling across the United States, because Adelson is, always been clearly against that happening.
Mm-hmm.
What impact do you think this will have, if any?
Well, with respect to that press release, it was really more of a rumor than a fact. We don't really know for sure if they can get $6 billion for the two properties in Las Vegas. I would think that they would strongly consider that. I think broadly speaking, Las Vegas right now is very challenged. Not only is it very challenged because we can all think about when is the next time we're going to go to a meeting, a convention, or trade show in Las Vegas? Probably not till 2023. Certainly, maybe 2022. But the way we used to know it and experience it, it's a couple years away, and that's a big issue. And when you look at returns on capital for the last several years in Las Vegas, every $100 million, not 10 million, every $100 million you spend on your property to add rooms or to upgrade it, you've gotten zero. Zero. In some cases, negative return on investment. And that's just because there's too much capacity. And so Sands has always been a company very focused on shareholder returns and return on capital. And so the concept that they might be thinking about Las Vegas is really driven from the fact that they look at putting money into Asia or putting money into other markets, and the returns are extraordinary. And the Asian market, Macau, I think 2021 is going to be the year by far of Macau's recovery. We could already see it, but I think the best area in gaming next year will be Macau. And so the company's just amazingly well positioned there. They've been expanding, they've been upgrading, and so they look at where do we spend our free cash flow. And in a normal year, this is a company that could make $4 or $5 billion in free cash flow. It's just an amazing thing to think about. How do you spend it? Well, they do give a lot back to their shareholders in the form of dividends and stock buybacks, but Asia, and more specifically Macau, has just been a great place. And this is a very disciplined company. They obviously were looking in Japan and just ultimately concluded it was going to be far too taxed, way too much taxes, and too high a cost to make returns that they're used to in Asia. So I don't think selling Vegas is a foregone conclusion, but it's also hard to imagine they're not looking around and seeing the valuations of the online companies and all of their peers, including Wynn Resorts, very recently announcing a deal in the online space. So, never say never.
Never say never. And speaking of Asia, Jason, when it comes to online gambling in particular, are your views positive about what could happen in Asia in the future here? Especially we've got China with all these cross-border restrictions, and the Philippines now with a 5% turnover tax. What is your view on that region from an online gambling perspective?
Well, the Asia online market is an incredible market. It's a gigantic business. It's highly controversial, and so I think most people in my shoes love it and hate it. And I think that's the best way to describe it. I love the just liquidity and the size and scope. But what I hate about it is and I'm speaking more specifically in the context of PlayTech, is the reputational issues that it creates. And while PlayTech has built an amazing software as a service business through its Philippine operations, it does raise reputational concerns, and I just wonder, a lot, if the cost benefit, if the cost of that, isn't worth the benefit. So over the last several years, PlayTech has made, many decisions to diversify down Asia as a total part of their profitability, including owning SniTech. And to the extent there were a buyer or an interested buyer in part or all of their Asian business, I've been supportive of that. But I think you're going to see over this course of the next 5 years, Macau, post-pandemic, license online gaming for those that are in Macau. So I don't think Macau is quite ready to broadcast out to China, but I definitely get the sense that there's a lot of thought into how that could work for online gaming in Macau for those that are in Macau, and obviously Hong Kong Jockey Club, which is just an incredible business, pursuing various online solutions as well in a perfectly controlled environment, no gray market, no black market. So that's my thoughts on it. I mean, it's hard to ignore, very big business, but just raises a lot of licensing and reputational issues that are hard for most companies in the US to overcome.
Very good, very good. And I can see that there are questions coming through, but before I have a look at those, I'm just going to have you touch on Brazil, Latin America. I know this is a huge region, but just really quickly, could you share your thoughts on what you're seeing in that region?
Well, it's certainly emerging. What I've found in Colombia and Brazil and throughout the areas and over the years, and this is not just specific to gaming, but in all businesses, it tends to ramp pretty slowly. It tends to fall short of expectations, and so I often say when companies are starting to talk about their growth prospects in Russia and Latin America, it's usually time to sell. And so I do worry that there's too much expectations coming out of those markets relative to other businesses that have expanded and just fallen short of expectations. So there's a lot of people, there's a lot of football, there's a lot of sports. I mean, these are passionate, parts of the world. But it's not. I think we were just talking about Asia. Asia is extraordinary. From my perspective, Latin America is still very much an emerging market and will take time to develop.
Very good. Very interesting perspective. Okay, so here is a question for you, Jason. It is, will U.S. land-based casinos look to acquire more European operators like Caesars acquiring William Hill?
I'd say definitely. And the reason definitely is because evaluations of U.S. land-based companies is almost double. The trading valuations are almost double that of those that are listed in the UK. So William Hill being one example, 888 being another great example, Playtech being a third example. For a U.S. company to acquire a UK company, it's immediately accretive. And it's my view that the profitability from the UK companies like 888 or Playtech would immediately get a US valuation multiple if owned by a US business. So it almost becomes self-financing from that perspective. And the US companies, I think, to a large extent are, recognize that they're catching up quick, but they are behind in terms of controlling the technology and experiences that are owned by the UK listed companies. So that's something that I've been predicting, and I would predict more of, that there's going to be continued acquisition of UK and European online businesses by US companies, as long as these US companies continue to trade at such a premium in the US.
Very good. Thank you. And another question. Do you think any of the online gambling companies will use the timing to acquire themselves into the land-based space?
So, because the land-based businesses aren't doing well and they're doing better, I mean, I don't see that. It's kind of like Amazon to some extent. It's been obviously a great success, and maybe this is an extreme example, but they actually opened up bookstores. And so if you go to New York City, you can go to the Amazon bookstore. And it was such a strange experience, a backwardly integrated tech business that's in a bookstore. And so I was walking through the bookstore, and they've picked all the books that they know people in the neighborhood like, and this is in Columbus Circle. So you would think with their technology, they know exactly what people want, because Amazon knows everything about all of us. It didn't really work very well. I mean, Amazon does a lot of things good. Running an actual bookstore was just a bookstore. So I think the online gaming companies are great at what they do. It's a very different business, and I just see partnerships, not ownership.
Okay, very good. And I actually have here myself a couple of bonus questions, as I call them, to ask you. We have a couple more minutes.
Mhm.
I, this one's kind of a fun one. Um, how does one fix the habit of publicly traded companies that shower their senior management with bonuses and other perks despite companies not having a great performance? What do you think about that?
Well, I hate it, I have to say, and I've been very critical of it.
Yeah.
I like management teams that are willing to work for stock only. I mean, I would do it. If I were a CEO of a public company, I would say, and Steve Jobs did this at Apple. I always thought it was an amazing thing. He took $1 salary, and the rest of his compensation was stock price, and he really believed that the stock was where the value was. And in my view, more CEOs should get paid in stock, and they should wake up every day perfectly aligned with their shareholders and say, I'm going to get rich, I'm going to make money. And there's nothing wrong with this in a capitalist society. I'm going to make money if my shareholders make money. So what can I do today? What can I do this week? What can I do this month that gets my stock price up? That's perfect alignment. And what I always advocate for is for management teams and executives to be showered with nothing other than stock, and to have their sole focus be building a business for the shareholders. It's so often that companies forget that the shareholders own the business and they work for the owners of the business. So that's up to. So your question is, what can we do about it? This is really a board issue, and we could advocate for board of directors that are very focused on shareholder alignment and shareholder returns. And I certainly haven't been afraid to express my views in that regard.
Very good. Love Steve Jobs. Love it. Thank you. And, I have a playtech question for you here, our last one of the day, I think. I know that you urged playtech to ditch TradeTech, and this was at one point. Although, when we hit 2020, for the first half of 2020, I believe this was their best performing unit for the first half of the year. So, wondering if your advice has changed.
So TradeTech had a spectacular year, and I'm very happy that we had it. My views on TradeTech is it's totally non-strategic and non-core to Playtech's gaming business, and there was never a push to sell it just to sell it. There was always a push to sell it at the right price. And based on 2020 performance, I think there's a much higher probability of getting a good price for the business, so that the resources can be rolled back into either buying back shares or reinvesting back into the core B2B business.
Very good. And actually, Jason, one more question did come through, so I'm going to ask it because we have a couple of minutes. Should building value for shareholders be the highest priority for a CEO?
I would say one of the highest. I mean, so shareholder. If you're a CEO, there's not just one goal. There's multiple goals. But right at the top has to be building shareholder value. I think thinking about stakeholders is also really important. When I say stakeholders, it is also as you lead a business, your impact on society, on the community, on diversity. Those are all critically important things as well. And so, I urge companies to focus on the shareholders, but it can't be at the expense of ignoring other very important social issues that are critical to your shareholders too. I mean, shareholders now want companies to have more diversity and to be thoughtful as it relates to how, and in the gaming industry, the business works a little bit less so on the environment, but more on the issue of problem gaming and finding and investing in solutions on that. So stockholder returns are right up at the top, but the other issues that relate to stakeholders in the business, all the people and employees that the business touches are also part of the job.
Amazing. Jason, I think that's exactly our time. And I just wanted to tell you how much I enjoyed this. You're an amazing speaker, a delight to chat with. And thank you so much for sharing your insights with iGaming Next Online. We all very much appreciate it.
Great. Thanks for having me.
Thank you guys so much, and we will see you tomorrow.
Take care.